the IRS. Just hearing those three letters is enough to make most people sweat, right? It's like finding out your dentist's also a beekeeper. Sure, they be good at both, but you're probably expecting a sting at some point. And for businesses, especially those handling sensitive financial data, IRS compliance isn't just a suggestion, it's the law. We're talking about the financial equivalent of wearing pants in public. Do it or face the consequences. Now, you might be thinking, John, I pay my taxes on time. I'm good, right? Well, not quite. See, the IRS doesn't just care about you pay, they're obsessed with you pay. Think of it like ordering a pizza. You might be starving, but if you try paying with a handful of loose buttons and lint, chances are you're not eating. That's where IRS compliance comes in. It's about making sure your financial house is in order, with all the right forms filled out, records meticulously kept, and processes squeaky clean. Because if the IRS comes knocking and you're caught off guard, well, let's just say you'll be wishing you kept better track of those receipts. So, why is IRS compliance especially crucial for businesses dealing with sensitive financial data? Think of it like this. If your business is a bank, the IRS is basically the FDIC, but with less insurance and a lot more power. They want to make sure you're handling money responsibly, not running a financial free-for-all. And if you're dealing with sensitive data, credit card numbers, social security numbers, the financial equivalent of state secrets, you better believe the IRS is watching even more closely. Remember that feeling when you finally think you understand something and then bam, the rules change? Yeah, that's IRS compliance in a nutshell. It's not a one and done deal. It's a constantly evolving beast that requires constant vigilance. Think of it like trying to hit a moving target while riding a unicycle on a tightrope over a pit of angry badgers. Just when you think you've got your balance, the IRS throws in a new regulation, a revised form, or an updated interpretation of a tax law that's older than your grandma. It's enough to make even the most seasoned accountant break out in a cold sweat. And let's not forget about the sheer complexity of tax laws themselves. They're like the instruction manual for a spaceship written in a language you vaguely remember from high school. There are deductions, exemptions, credits, and loopholes, all designed to make your head spin faster than a top on a sugar rush. It's enough to make you want to give up and move to a deserted island, but then you'd have to deal with import taxes on coconuts, and nobody wants that. Let's talk about the fun part, the consequences of non-compliance. Because if you think the IRS is messing around, think again. They've got more ways to make your life miserable than your internet provider during a thunderstorm. First up, audits. Nobody likes an audit. It's basically the IRS showing up at your door, demanding to see your financial underwear drawer. They'll comb through your records, scrutinize every deduction, and question every expense. And if they find something fishy, well, get ready to open your wallet wider than a kid in a candy store. But wait, there's more. The IRS can also hit you with fines that would make your eyes water. We're talking about penalties so hefty, they could rival the cost of a small island nation. And if they're feeling really frisky, they might even throw in some criminal charges for good measure. Suddenly, that deserted island doesn't sound so bad, does it? But here's the kicker. Even if you manage to avoid the wrath of the IRS, non-compliance can still ruin your business. Your reputation takes a nosedive, customers lose trust, and investors run for the hills. It's like trying to sell a used car with a giant lemon sticker plastered on the windshield. Plastered on.